Hello, this is a worked example of the 2016 HSC Business Studies exam, questions 11 and 12. I think it's a really good example of the way exam setters can leave key parts of financial documents in a way to test your understanding of them and the financial ratios. So let's jump straight into this question. First thing we'll notice is that there are key things missing from this balance sheet for Steve's Lawn Services. We can see that there is stock missing and that the balances are missing. So already that gives us a bit of a clue that maybe that's something we're going to have to calculate eventually. We also see that the industry standard current ratio for this is 1.9 to 1, and that's going to come into play as well in the question. So let's have a look at question 11 and see what we're asked to do. If Steve is a sole trader, how much equity does he have in the business? In this situation, it is pretty straightforward. We are simply just going to add together these two figures from the total equity column. Sometimes what can be in this column are some things that don't really fit, that shouldn't be under total equity, or we might see the word drawings here, which means that we actually have to take that away from the total. But in this situation, both of these fit and are relevant, and it is really just a matter of B being the total if we calculate these two together. So that's how we find that answer. The next step's a little bit more tricky. We're going to have to actually now find the missing pieces of the balance sheet, starting with the stock. So coming into question 12, the current ratio is given for us on the page. For this business, is the current ratio too high, acceptable, dangerously low, or just unable to be calculated? In this situation, it can be calculated. We are given enough information, but we are going to have to fill in the blanks. How do we do it? Well, using the accounting equation, we know that assets are going to equal liabilities plus owner's equity. So we are given enough information here to calculate the total of those two. And as we can see, 146,000 is that total. So what that means is we know by that accounting equation that given 146,000 is the tally of liabilities and equity, we know that it must also equal the tally of the assets. So we put the balance where it belongs, and now all we simply have to do is find the missing number here, the difference between all of these figures added up and 146,000 by that accounting rule. So we know that that now stock will be valued at $3,000 on this balance sheet. Having a full balance sheet now, we can actually use the current ratio. And as we see here, current assets divided by current liabilities, if we do that, we are simply adding the current assets, we are adding the current liabilities, putting one over the other, and we get the answer of 2. Or, as a fraction, it would be 2 over 1, which means 2 to 1. With the industry standard being 1.9 to 1, we know that that is acceptable. It is not too high. So that is how we reach the answer for the current ratio for question 12. Hopefully this has been useful, and good luck.